Hello everyone, welcome back to our Strategic Wealth Builder channel, where we focus on personal finance and helping you achieve financial freedom. Today's topic is crucial: how debt affects your ability to build wealth and what you can do to eliminate and beat debt using cash values of a permanent life insurance policy such as whole life. Now, if you're struggling with debt and you want to take some control of your finances, this is a video for you, because debt can be a significant obstacle to building wealth. Or high interest debts such as credit cards and personal loans can drain your financial resources and prevent you from saving and investing in your future. As your debt accumulates, your ability to grow your wealth diminishes, leaving you with limited financial freedom. One effective strategy to tackle debt and build wealth is through permanent life insurance policies such as whole life insurance. Now, whole life insurance is very much misunderstood, but it is a type of permanent life insurance that provides coverage. But in addition to the death benefit, whole life insurance policies build cash value over time. That cash value becomes very, very important in the future as you face emergencies, opportunities, or various financial circumstances throughout your lifetime. Having access to cash or capital is very, very important. First thing is that the policy itself begins to accumulate cash as you pay your premiums. So a portion of the premium goes towards purchasing the life insurance, but the rest of it goes towards building cash value in your policy. Now, over time, this cash value grows, providing you with a source of funds that you can then use for your benefit. So once you've accumulated sufficient cash value, you can withdraw money from your account. You can do it a couple of ways. One is through a policy loan, and there's reasons you might want to do that, or you can just make a withdrawal to access those funds. But in either event, once you take money from a policy, it's important that you create a process to put the money back in the account, so that you're constantly recapitalizing your what we call your banking system. When you borrow money out of a policy, or against your policy, I should say, and there's reasons you may want to do that. One of those reasons is that loans from the insurance company, utilizing your cash values as collateral, those interest rates are generally much lower than credit card rates or other types of consumer debt loans. And you don't have to qualify for it. This is not a loan that is put on your credit report or anything like that. The money is yours. You're just using it as collateral, and the insurance company is loaning you their money. And because they know that they've got your cash values, there's no credit check. There's no issue in you getting the money out of your account. As a result, that means that you are in control of your financial processes, because sometimes if you're looking at charging something down a credit card at an 18 or 20 or 22% interest rate, and you can get it from the insurance company for 4 or 5, it would be much smarter to get from the insurance company. As a result of using the cash values to pay off high interest debts, you are eliminating or significantly reducing the amount of interest that you might pay to that financial institution, which potentially saves you thousands of dollars in interest payments over your lifetime. And the cool thing here is there's no set repayment schedule. You actually are in charge of how much you pay back, when you pay. If you want to take a break for a bit, you could do that. You are in control of the repayment process. But it's very important for us to mention here that it is essential that you pay back the loan, because any money that's out of the contract, if you happen to die with money out, that does reduce your death benefit, and you might not want to do that. What we're suggesting is that when you take money from your cash values of your permanent whole life policy, that you treat those dollars as money that you had borrowed from a credit card company, that you would actually set up a repayment schedule and put the money back in. And because that is one of the powers of financial planning that we teach our clients, is the importance of constantly recycling their money, keeping it moving, taking money out, putting it back in, taking it out, putting it back in, always replenishing or recapitalizing capital account. So that process is something we call the family banking system. It's a financial strategy that, when employed, will help you retain more of the money that normally would be going out to credit card companies and finance companies. Those are dollars that are never coming back. There's something we call a wealth transfer. Wealth transfers, or money that leaves your checking account never to come back, is money that you don't get to utilize for your benefit. The financial institutions do, but you don't get that opportunity. With the family banking system, we show you how to recapture those dollars, how to constantly bring those dollars back into your account instead of leaving them with a financial institution for them to reap all the benefits. And if you want to learn more about the family banking system, we've got a video that we'd like you to watch. So just click on the link below and that'll take you over that family banking system video. Now, in addition to helping you tackle debt, whole life insurance offers many other benefits. One of those is something called lifetime coverage, meaning as long as you're paying the premiums, and in some cases you can actually stop paying premiums, but still have the coverage stay in force. That allows you to keep a policy in force for your entire life, so that the ones that you're trying to take care of in the event of your death, you can protect financially. Now, that's very important because many other types of insurance, such, for example, such as term insurance. Term insurance, as the name indicates, it's for a period of time, 10 years, 15 years, 20 or 25, 30. There's a time period involved. And at the end of that period of time, if you still need coverage, it's going to be a lot more expensive to get it because you're now older. And what if your health has changed? You may not even be able to get it, or if you can, you may not get it at a standard rate. So it's always valuable to have an insurance policy in place that will stay in force for your entire life and that the premiums are guaranteed so that they can't change them on you. And the really powerful thing is that whole life insurance gives you those guarantees, but it also guarantees that you will accumulate some cash along with that, which could be very, very important down the road. In addition, being able to keep the coverage in force over your lifetime, keeping the premiums guaranteed, the cash value accumulation not only is a systematic savings mechanism, but money that is growing inside a cash value policy grows without taxation, meaning there's no taxes that increases, like a CD or a savings account where you get interest. That interest has to be declared as taxable income every single year and you have to pay a tax on that. That's not the case in a whole life policy. The cash values grow without current taxation. But the really cool thing is down the road, you could actually pull the money out of the account, out of that whole life policy, without paying any tax, and you can use it to supplement retirement or any one of a number of things that you may want to do, but you will not have to pay tax on it as you pull it out. Very, very important. This is something, by the way, that the wealthy have been doing for decades. They stuff tons of money into these tax advantage insurance contracts, these whole life contracts, with the idea that they're going to avoid taxes in the future. And we want to share that idea and that concept with you. Debt really can be a significant roadblock to building wealth. But with the right strategy and tools, like permanent life insurance, you can overcome it. You can actually, with the banking system that we teach you, you can actually transform that consumer debt into wealth. Your car payments, your credit card payments, your student loans, all that can be transformed into capital and wealth for you. By leveraging the cash value of your insurance policy, you can eliminate high interest debts and begin to pave the way for greater financial freedom. And if you're interested in learning more about whole life insurance and how it can help you eliminate and beat debt, we'd love to have you reach out to us by clicking on the link below. We really look forward to helping you and working with you. So take a minute, reach out and connect with us. You'll be glad that you did.